Fact number 1. The word salary comes from the Latin salarium, referring to salt payments given to Roman soldiers. Fact number 2. The first paper money was used in China during the Tang Dynasty, 618 to 907 AD. Fact number 3. The U.S. Federal Reserve was established in 1913 to stabilize the banking system. Fact number 4. FDIC insurance covers up to $250,000 per depositor, per bank, per account category. Fact number 5. The first credit card, Diners Club, was introduced in 1950. Fact number 6. Central banks can create money through a process called quantitative easing. Fact number 7. Switzerland's central bank is partially publicly traded on the stock exchange. Fact number 8. The penny costs more to produce, approximately 3 cents, than its face value. Fact number 9. Most modern money is fiat currency, not backed by any physical commodity. Fact number 10. The Bank of England, founded in 1694, is one of the oldest central banks in the world. Fact number 1. The New York Stock Exchange, NYSE, was founded in 1792 under a buttonwood tree. Fact number 2. The first stock exchange in the world was established in Amsterdam in 1602. Fact number 3. Bull market refers to rising markets. Bear market refers to declining markets. Fact number 4. The S&P 500 has averaged roughly 10% annual returns historically. Fact number 5. Warren Buffett bought his first stock at age 11, 3 shares of Citi's service. Fact number 6. Index funds were pioneered by John Bogle and Vanguard in 1976. Fact number 7. The Dow Jones. Industrial average originally tracked just 12 companies in 1896. Fact number 8. Stock market crashes have occurred roughly every 10 years on average. Fact number 9. Compound interest is called the 8th wonder of the world, a phrase attributed to Einstein. Fact number 10. Dividends can account for nearly 40% of total stock market returns over the long term. Fact number 1. The average American carries over $6,000 in credit card debt. Fact number 2. A FICO score ranges from 300 to 850. Above 740 is generally considered excellent. Fact number 3. Credit scores were first introduced by Fair Isaac Corporation, FICO, in 1989. Fact number 4. Paying only the minimum on credit cards can take decades to pay off the balance. Fact number 5. The U.S. national debt surpassed $30 trillion for the first time in 2022. Fact number 6. Mortgages originated in medieval England, where land was pledged until a debt was repaid. Fact number 7. The word mortgage comes from Old French, meaning death pledge. Fact number 8. Student loan debt in the U.S. exceeds $1.7 trillion. Fact number 9. Debt-to-income ratio, DTI, is a key factor lenders use to approve loans. Fact number 10. The 2836 rule suggests spending no more than 28% of income on housing and 36% on total debt. Fact number 1. GDP, gross domestic product, measures the total value of goods and services produced in a country. Fact number 2. Inflation erodes the purchasing power of money over time. Fact number 3. The rule of 72 estimates how long it takes money to double. Divide 72 by the interest rate. Fact number 4. Hyperinflation in Zimbabwe, 2007 to 2008, reached 89.7 sextillion%. Fact number 5. Deflation, falling prices over time, can be more dangerous to an economy than inflation. Fact number 6. The Great Depression of 1929 saw U.S. unemployment reach 25%. Fact number 7. The 2008 financial crisis wiped out approximately $19.2 trillion in U.S. household wealth. Fact number 8. Stagflation, high inflation combined with high unemployment, plagued the U.S. in the 1970s. Fact number 9. Interest rates set by central banks influence borrowing costs across the entire economy. Fact number 10. The Gini coefficient measures income inequality within a country. 0 equals perfect equality. 1 equals maximum inequality. Fact number 1. The 50-30-20 rule. 50% needs, 30% wants, 20% savings/debt repayment. Fact number 2. An emergency fund should ideally cover 3 to 6 months of living expenses. Fact number 3. Starting to save at 25 versus 35 can result in double the retirement savings due to compounding. Fact number 4. The average millionaire has 7 streams of income. Fact number 5. Automating savings increases the likelihood of actually saving money. Fact number 6. Lifestyle inflation, spending more as you earn more, is a leading obstacle to wealth building. Fact number 7. Net worth equals total assets minus total liabilities. Fact number 8. The average American saves less than 5% of their income. Fact number 9. Financial literacy is not taught in most U.S. public schools, despite its importance. Fact number 10. Living below your means is the most consistent strategy practiced by self-made millionaires. Fact number 1. The U.S. dollar is the world's primary reserve currency, used in approximately 88% of global forex transactions. Fact number 2. The euro is used by 20 of the 27 European Union member states. Fact number 3. The forex, foreign exchange market, is the largest financial market, with over $7 trillion traded daily. Fact number 4. Switzerland's franc is considered one of the world's safest currencies. Fact number 5. The IMF, International Monetary Fund, was established in 1944 at the Bretton Woods Conference. Fact number 6. China holds more U.S. Treasury bonds than any other foreign nation. Fact number 7. The BRICS nations, Brazil, Russia, India, China, South Africa, collectively represent approximately 40% of the global population. Fact number 8. Microfinance, lending small amounts to entrepreneurs in developing nations, was popularized by Muhammad Yunus. Fact number 9. Japan's national debt is the highest in the world relative to GDP, approximately 260%. Fact number 10. Oil prices are globally quoted in U.S. dollars, which reinforces dollar dominance. Fact number 1. Loss aversion means humans feel losses roughly twice as strongly as equivalent gains. Fact number 2. Anchoring bias leads investors to fixate on irrelevant reference prices when making decisions. Fact number 3. Herd mentality in markets drives both bubbles and crashes. Fact number 4. The disposition effect causes investors to sell winning stocks too early and hold losers too long. Fact number 5. Overconfidence is one of the most common and costly biases in investing. Fact number 6. Recency bias makes investors assume recent trends will continue indefinitely. Fact number 7. Dollar cost averaging reduces the emotional impact of market volatility. Fact number 8. Diversification across asset classes reduces portfolio risk without proportionally reducing returns. Fact number 9. Don't put all your eggs in one basket is the foundational principle of portfolio theory. Fact number 10. The efficient market hypothesis argues that stock prices always reflect all available information. Fact number 1. IPO stands for Initial Public Offering, when a private company first sells shares to the public. Fact number 2. A company's market cap is calculated by multiplying share price by total shares outstanding. Fact number 3. Earnings yield per share, EPS, measures how much profit a company generates per share. Fact number 4. The price to earnings, PE ratio, compares a stock's price to its earnings. Fact number 5. Bonds are essentially loans made by investors to governments or corporations. Fact number 6. A company's balance sheet shows assets, liabilities, and shareholders' equity. Fact number 7. Cash flow is often considered more important than profit in evaluating a company's health. Fact number 8. Mergers and acquisitions, M&A, activity, peaks during economic booms. Fact number 9. A hostile takeover occurs when a company acquires another without the target board's consent. Fact number 10. Share buybacks reduce the number of outstanding shares, often boosting earnings per share. Fact number 1. Bitcoin, the first cryptocurrency, was created in 2009 by the pseudonymous Satoshi Nakamoto. Fact number 2. There will only ever be 21 million Bitcoins in existence due to its coded supply cap. Fact number 3. Blockchain is a decentralized digital ledger that records all cryptocurrency transactions. Fact number 4. El Salvador became the first country to adopt Bitcoin as legal tender in 2021. Fact number 5. The NFT, non-fungible token, market peaked at over $40 billion in 2021. Fact number 6. PayPal was founded in 1998 and was a pioneer of digital payments. Fact number 7. DeFi, decentralized finance, aims to replicate financial services without traditional banks. Fact number 8. Central bank digital currencies, CBDCs, are being explored by over 100 countries. Fact number 9. Mobile banking has brought financial services to over 1 billion previously unbanked people worldwide. Fact number 10. The global fintech market is projected to grow to over $300 billion by the end of the decade. Fact number 1. The Medici family of Florence in the 15th century pioneered modern banking practices. Fact number 2. The tulip mania of 1637 in Holland is considered one of history's first speculative bubbles. Fact number 3. Alexander Hamilton established the U.S. national bank and financial system in the 1790s. Fact number 4. The gold standard, tying currency to gold, was effectively abandoned globally by 1971. Fact number 5. The first ATM was introduced in London in 1967 by Barclays Bank. Fact number 6. Charles Ponzi, after whom Ponzi schemes are named, defrauded investors in the 1920s. Fact number 7. Bernie Madoff ran the largest Ponzi scheme in history, defrauding investors of approximately $65 billion. Fact number 8. The Black-Scholes model, developed in 1973, revolutionized options pricing in financial markets. Fact number 9. The concept of insurance dates back to ancient Babylonia, where merchants paid premiums to protect cargo. Fact number 10. The word bank is derived from the Italian word banca, meaning bench, where early money changers worked.